Good morning, traders. This is Brad Matheny. Today's the 19th of September. And boy, what a crazy night session we had. Let's take a look real quick at the the S&P 500 futures contract. Look at this big breakaway bar. I mean, that's what the Fed rate cut prompted. It was a huge relief to the markets. And we are now clearly breaking to new highs. You can see over here, we've broken above the ultimate high level. We do need to see a close today up in this area. We cannot see a turnaround. This is again a new high, a new higher high, a new higher low, very clearly breaking to the upside off the Fed news. And even as I wrote yesterday, the Fed move yesterday to me seemed more like give the markets room to run. Everything seems to be stabilizing. And it seemed to me as more of a shift away from an arrogant type of Fed move to a more uh, active management type of role, meaning that there's no reason for us to continue to crush the market in terms of what the market capabilities are. There's we're post COVID, we're in a new era. We managed through the crises. We haven't seen any major crisis events take place in a long while, actually, since COVID. We've had a couple of little bank failures and things of this nature, but nothing like the global financial crisis. And I think the Fed, unlike before, would arrogantly raise rates into crisis events and react poorly in a way that prompted an unwinding of capital. I think the Fed right now is trying to manage capital expectations and growth expectations, and is clearly probably understanding that the dynamics of the world. I just read an article yesterday that Chinese real estate has collapsed by more than 45-55% through most of the country, and has been that way now for 3 or 4 years. I'm sure that other nations are feeling the same type of pain, maybe not to the extent that China has, but remember what our market was like when the markets collapsed and how it took 8-9 years for the markets to recover. They're going through their own crisis event. It's probably happening throughout all of Asia in some degree, maybe even throughout the world. We're in a very unique scenario, and I keep trying to tell you that the U.S. markets are performing very, very well compared to the global markets. It's almost as if the global financial crisis hit the world except us recently, and it's because we're still the most dynamic and most capable economy on the planet. The US is. And that's why you're seeing the US dollar continue to strengthen. You're seeing gold and silver continue to rally. You're seeing a pretty big move in the sense that you're really, seeing the dynamics of what I would call a 1940s or 50s or 60s style US economy, where, the US had just beaten Germany and Japan in World War II. We had a high level of debt to GDP ratio. The world was reconstructing after a crisis event, and the US economy was the 900-pound gorilla. And I think that's kind of where we're at right now. The world is contracting downward, going through an economic crisis type of mode. And the US just continues to churn right along after we've had our crisis modes and act as kind of like the 900-pound gorilla. So at this point, we are looking at a breakaway pattern. We are looking very solid. We come over here to weekly. It's going to be a very solid rally out of this phase if this continues. And it's just going to be at this point, I think, a matter of time before we start moving up into these upper channels. You can see all these lines that I've drawn. These are all channeling. And it makes sense to me that we are going to potentially move up into this channel And remember, that puts us above 6,000, which on the SPY over here, back to my very colorful chart, as everybody tells me, with all my swirly lines. I'm going to leave some of these here. I'll go back down to daily. So we're looking at a move here. Look at this, 570 already up 8-9 points in the 1.6%. We're going to be looking at a move up into this 580, 590 area fairly cleanly, ignoring this big rollover pattern. And again, it was all because of the Fed and it was all because of the move, but we still need confirmation today. This is a good, solid breakout to the upside. I mean, it's a big breakout to the upside. And the move, the interpretation of this move by the market breaking up at, almost 2% to the upside basically means that, kind of like taking the shackles off the beast, letting the economy, the US economy, roar a little bit, kind of shake off the chains and really move into kind of a super growth environment, which headed to the election could very well put us up into this rally up into late September, early October, peak out around 585, 595, and then potentially roll into a crisis mode. It would not be uncommon to see something like that happen. But until then, you've got a nice solid, literally, you've got a nice solid rally phase here from basically where we ended yesterday all the way up here, about 5, maybe 5.5%. I would guess that this 585 to 605 area, this area right here, it's going to be our new target area. And it's probably going to move pretty quick, guys. It's probably going to be no more than a week and a half, 2 weeks. We're going to be up trading in this area, somewhere up here. There's my swirly line. But again, I think we're going to probably move up sharply, peak, and then move potentially down into this area, maybe into early October, setting up a very sharp, maybe pullback prior to the election. It is very common. That's why I keep telling you this. It is very common to see uncertainty before the election, and especially with the changeovers we've had this election and the real uncertainty that's coming into this election. Now, of course, the continued odd assassination attempts against Trump don't really help the situation. But like I said, at this point, take it for what it is. Okay, so let's go to the QQQ. Don't want to waste a lot of time. By the way, thank you for all the great comments. Really wonderful. Okay, 481. We're up into this area here. Still not above this area. So we're trading right now in this area. And that puts us up above this high, but not above this ultimate high here. I would urge us then to be very cautious. We still have not cleared this ultimate high area right here at 485.39. This means that we could still see a rollover type of trend coming like this, moving higher, basing, and then rolling. So be very cautious. We may see something like that playing out over the next week or two. QQQs seem a lot weaker than the SPY. And I'll check the RSP here real quick. This is the equal weight. Oh, equal weight is up huge. 2.14% up here near this level here right now. Really going to open up a huge expansion, especially if it continues. Possibly getting up into this 180 area today. We'll see how it plays out, but NASDAQ is much, much weaker. Okay. And again, I would urge you guys to be very cautious of the NASDAQ right now. it may be the underperformer right now. So let's go to gold. Gold is up rather big today, up to 2609. Spread this apart a little bit. Come back in here, auto scale. Oops, no, I don't want to draw. And you know I will eventually draw, but here we go. We're still rolling through that sideways trend. I mentioned to you guys, and there were a lot of questions about this, but I mentioned to you guys how this 2585 to roughly 2595, really 2585 or lower, would be a great buy opportunity. And we had that opportunity right in here. And now, granted, I may have said 2595, which would be roughly in this area, but really that 2585 to 2595, roughly this area, was a great buy opportunity. And throughout this rotation, even yesterday, as things were collapsing, I was getting some comments about, gold is under a lot of pressure. What do I think? And I still thought that it was a great buy opportunity off of this rolling pattern, thinking that we're going to move back up into this 2630, 2640 area. And I still believe that's the case. I still believe we're moving right up into this area, potentially like into this lower area, 2640, 2645, on a fairly strong move. If you did buy down in this area and we see gold move up to 2630, 35 again, I mean, don't take it the wrong way. You would be absolutely foolish not to lock in some profits and say that's a great trade. Okay. If it gets up to 25.45, let it ride with a few extra. And just trail your stop up. But if you entered down in this area and you're exiting here, we'll come in here. If you entered down in this area and you're exiting up in this area and you had a stop down here, move your stop up into this yellow line 20, 25.92, 25.94 area and let the rest roll. See if you get up to this 26.45 area. That's the smart play. It was a great call. I mean, it was a 25.80, let's say, to where we're at right now, 26.10. It's a $30 move in gold, $3,000 per contract. If it gets up here to my 25.30 area, that's going to be do the math real quick, a $50 move, $5,000 per contract. I know some traders that are probably trading 10, 15, 20 contracts. You do the math. That's a real instant 30, 40, $50,000 in days. And now again, it takes lots of guts to trade 20, 30 contracts of gold, but I know that there's people out there. In fact, I get emails from one of my subscribers that's doing exactly that, and she's made a small fortune off my analysis. So I'm very proud of being able to deliver this kind of research for everybody. Okay, silver's probably doing the same thing. Boom, there we go. Big beautiful move. We're really looking at this 3180. Remember, silver's not going to start to move aggressively to gold until we move into the broader expansion phase, which, remember, the broader expansion phase is literally weeks away. I don't think I have it here. I don't know. Yep, I do. The broader expansion phase is many weeks away, potentially over in this area here. And that moves us into really, March through May of 2025. And what that would look like would be get through the elections, get through the inauguration. Let me come over here, mark the inauguration right here, January 21st. There's the inauguration. So what that would look like for silver is rally up out of this, get through the inauguration, start to move here with gold. There's the inauguration, get through this with gold, and then start to really accelerate upward as gold moves. So if silver is capable of doing this up to $55 to $75 with a big move, it's is going to be a huge move in gold, which would see gold potentially moving much, much higher, as you can see that I've drawn here, maybe up into this 37.50. Now, why is this so important? Because if silver is able to make a move up to 50, 60, $70, which is doubling compared to where gold is, it really comes down to the idea that we get that gold to silver ratio, which if you ever tried to do this, divide by SI, there's the gold to silver ratio. Looks like I've got a lot of drawings on here from earlier. Try to get rid of these. And where we're at, if you take a look at this historically, these were the big peaks. And this is where you start to see gold accelerate and silver start to really accelerate. So now let's take a look at this. Add silver down here. Add it as a new pane. And yes, I have my other indicators on here. I'll leave them on for now. So anyway, you can see here how silver really starts to accumulate and you start to get this downward cycle pressure. But normally it happens after gold reaches some sort of an apex. So you can remember here that what's happening here is we're getting, silver is collapsing to gold, which is not collapsing as strongly. And then we get it to move back. Now we come back over here to weekly. And you go back to 2011. Where are we? 2014, right back over here. 2011, 8, 9, 10, 11. There's the peak. That's what the peak in gold and silver look like. Okay, that was the peak. So now we need to see a ratio or a real breakdown in order for gold and silver. In order for gold and silver to really accelerate, we need to see some breakdown. And the real breakdown event sets up potentially right over here. So this is where we're kind of looking here. And the reason why I'm drawing these cycles is off of these lower event cycles and then down to here where we have these deeper event cycles. So I would say in reality, this area right here, November 2025 through July 2026, to me, that area looks like a pretty good area for a major topping event in gold rolling back over to this area, which potentially 2028, 2029 gives us a pretty good major topping event for gold and silver. So maybe 4,000, 4,500 gold here, maybe 55, 65 silver, and then back over here, maybe 75, 8,500 gold, maybe, 75, 78 silver. And then eventually we're probably going to move over to the big broad topping event. Yep, we do in 32, 31, 32, right over here, which could roll gold and silver even higher. Gold maybe up in the 85, 9,500 area, and silver maybe up in the 130, 140, 150 area. So, mark these areas. March through June, July 2026, January through, call it May, June 2029, and call it September through 2031 to March, April 2032. Those are really going to be your, in my opinion, your target peaks for metals. Okay, so we'll get rid of this. We took a look at silver, took a look at gold, 20 minutes. Let's go over to Bitcoin. Go back over here, go back over here, go back over here. Drag this. Now I would expect Bitcoin to be a bit higher. 815 bucks. Get rid of my things at the bottom. And here we are. Really kind of rallying out of that, just like I suggested. I still see that we need some kind of a roll here. So be aware that, this is maybe just reactionary to this upside move. It could be very strong and breaking out of this move off of Fed, kind of like taking the chains off. But I still think we need to see that roll downward. So be cautious. We may be rolling into a flagging pattern. Let me just leave some of these. I don't know what to do. I'll get rid of this. Leave that. Leave that. Get rid of this. Get rid of this. Get rid of that. Get rid of that. And then highlight kind of this. If we get into release the beast kind of mode, then we might get some kind of a roll like this, setting up kind of an upward flagging formation, which would be really this type of a mode here, off of these lows, coming up off of these channels here, coming back up into this kind of an apexing formation and really ripping up this channel. So you can see here, if I draw this channeling mode and make it, where's my coloring? Make it a, I don't know, I'll make it a yellow, I guess. So I'll make it a yellow and make it a yellow. If we don't return back to this apexing pattern here, it kind of makes sense that we're going to move right across this channel all the way up into this area. And that would, of course, negate that and put this back here, meaning we roll up here into this apexing mode here, and then attempt to break out. So what I'm trying to do is read what price is giving me, not trying to force price into what I think is going to happen. So again, it's a good example of adapting to what price is showing me. Now, I still would say that this is valid. If we roll and come down back into this area is still valid and could become true, but I'm adapting to what price charts are showing me. We're clearly up above my resistance area, clearly above my flag right now, clearly in an uptrend, and clearly flagging and channeling upwards. So this is my new expectation. And good luck, guys. Like I said, this is going to be a fun rally, so I'll let it go right there. Again, great comments. Thank you. Love the boost. Love honestly, love the fact that I'm helping everyone. And even got a comment last night. Somebody said they want more content like this. Well, I don't plan on stopping. In fact, I'll tell you a little bit more about why I got started doing this. Whoops. What was okay? Don't know what that was. I'll tell you why I got started doing this with sharing this content like this in the next video or two. All right, guys. Talk to you later.